The Rebel Capitalist Show.
You have a very similar view to China as Hugh Hendry. I just spoke with Hugh, and what's interesting is Hugh went to Wuhan, China in 2009. And, back then, that was before he retired. And he went there specifically so he could see with his own eyes what was happening with the Chinese real estate market. And he put on a bunch of trades because he thought the whole thing was going to blow up. But he said he was 12 years too early. And he says now he thinks his thesis back in 2009 is actually going to play out. So I asked him, I said, okay, Hugh, if you were running money today, how would you play it? And the first thing he said is he'd probably short the yuan. What do you think about that?
I would not bet against the Chinese central bank. It's more likely that they could take a break from maybe stockpiling some of these base metals like copper and iron ore, but then the mining companies won't make investments into new supply. So that will correct itself within I would say 2 or 3 years. So you could have, if you have temporary deflation where asset prices crash, where the Chinese government makes even more mistakes, because obviously there's a lot of mistakes being made now with the US and China. All these governments are making mistakes. All these governments and central banks are all making mistakes. The difference here is that a lot of these central banks just paper them over. So if we didn't have central bank intervention, we would have free market forces, we would have deflation, we would have debt deflation and wide-scale bankruptcies. We have politicians and bureaucrats and central bankers trying to prevent that at least in certain instances, and they're picking out winners and losers. Like in China, in this case, a lot of the property owners are going to get screwed. The Chinese banks for now are being saved, and the Chinese real estate developers are the ones being allowed to fail. I don't know how many of these Chinese real estate developers executives are going to go to prison or they're going to be sentenced to death, because being a billionaire in China is very, very dangerous.
Right. But don't you think that them trying to paper over the problem is going to potentially force them to depeg?
They could repeg at a new exchange rate.
Yeah. That's especially if the dollar continues to go up, on the DXY because of all these other factors we're talking about: global dollar denominated debt, eurodollar futures curve, all that stuff.
I would be more rather than shorting currencies, because I know people like Stanley Druckenmiller have made enormous sums of money on currency bets, and like George Soros and Stanley Druckenmiller, those guys are the ones who made enormous sums trading currencies. I think like if we do have China where we have wide scale defaults, housing prices keep dropping, I think that will affect base metals more. So I think base metals.
Got it.
But then you have the Latin American governments that are putting all these taxes, that are starting to hike taxes because they see the copper price right now is over $4 a pound, and they're putting on large royalty taxes, whether that's Chile and Peru's talking about tax hikes on miners. I think they're the second largest copper producer in the world. So you could potentially have some supply problems too. So if they put restrictions on the miners, so you might not see commodity prices stay that low. And normally, George, what happens then is governments decide they want to print. So I think stagflate, until we have a new system, until we have a totally new global financial system, I think the preferred policy methods here are still stagflate tax lie. Now we could have temporary deflation, but it might only last 6 to 8 weeks. It seems that that's like the right amount of time now for where the Federal Reserve will issue the right amount of press releases after asset prices crash to try to get them to rally. Because if the asset prices don't rally, George, if they stay low, the Fed has to plug the holes in the U.S. federal government budget deficit, in the U.S. federal government tax revenues, for capital gains taxes on stocks, bonds, real estate. And then it becomes a vicious cycle. And you and me are the only two people talking about this. If real estate prices crash and stay low for 2 or 3 years or 4 years, what's going to happen then to property taxes? In China, and this is their pyramid scheme, their real estate scheme for a lot of these provinces and cities, 84% of their government budget is on rezoning land. So this is farmland that's either not being used right or not being used at all, and then sold to the real estate developers for luxury condos. So what happens when real estate prices crash and governments can't do that for their government budget? 84% of their government budget. Here in the US, it's not quite 84% for property tax revenues, but I would say a lot of these state and local governments, they're reliant on their annual tax revenues, 50% or more property taxes. What happens if property prices crash? Then those state and local governments are insolvent.
And you know what's interesting about that concept, Jason, that I've never really heard anybody articulate. I've tried to articulate it on a couple of my whiteboard videos, but people assume that inflation is good for the government because they paid their debt back with cheaper dollars. But what that means, if that comes to fruition, if that plays out, is that inflation creates an environment for the government where their tax receipts are increasing. But what we could see, because now the tax receipts aren't really a derivative of consumer prices, they're more so a derivative of asset prices. You could see in a world where we have high rates of inflation, but yet the tax receipts are actually going down, not up, because consumer price inflation goes up, but yet nominal prices of assets are going down. And it's this very bizarre world that I don't think we've seen in the United States before. We've made this slow transition to where the majority of the tax revenue is a result of asset prices. I think that's been happening since the 1990s, but we've never gone into severe price inflation while we've lived in this financialized world. And yeah, to your point, I think you and I are pretty much the only people that I know that are discussing that.
So the tax base would have to change again at that point. It would take a long time to change it, though, because then you'd have to start making drastic changes.
Yeah, I don't even know how you would change it. I mean, and if people want some data to back this up, all I have to do is just look at the tax receipts as a percentage of GDP. And you'll notice that it really doesn't have anything to do with the highest marginal rate. It really has to do with what's happening with the stock market. So if the stock market's going up, then you see the tax receipts increase as a percent of GDP. If the stock market crashes, then you see it; those receipts decrease.
And this is also why I said, even though governments don't really like Bitcoin too much, they like the tax revenues from Bitcoin and cryptocurrency trading.
Right.
So while they transition to digital currencies and central bank digital currencies, and they scale things up with pilot programs and cross-border trade settlement with they do cross-border trade settlement with central bank digital currencies. They're still testing that, and it's nowhere near the scale that the global economy is. So if Bitcoin were to say, and this is hypothetical, I'm not predicting that Bitcoin's going to $1 million in a couple of years or anything. Maybe in 5 or 10 years, it'll go to 6 or 7 figures. We'll see. But if it does, from a return on investment for the US government, for government spending, so for an infrastructure program or government spending program, the government doesn't have to spend anything. No, they don't have to allocate any congressional budgets. They don't have to go through that hassle. So if Bitcoin goes to $1 million or 2 million, imagine hundreds of billions, if not trillions, in extra tax revenues and that the government could tax. And then they would still be scaling up. So on one hand, they would have all this tax revenue and they'd have a new class of wealthy people. And then on the other, they could still scale up the central bank digital currencies and then eventually just tax and regulate Bitcoin or make you change the tax laws ex post facto to get you.
Yeah, but I think and I'm very bullish on Bitcoin. I think everyone should own it. Maybe not necessarily because of the price going up, because it's something that's outside of the commercial banking system. But I think people who own cryptocurrency need to learn the lessons of other commodities. Earlier in the interview, you were talking about how the price of copper has doubled. Therefore, these copper producers have a target on their back with these governments that are trying to squeeze as much blood as they can out of the turnip. And if cryptocurrency is the only game in town, the only asset that's going up, you can rest assured that at some point the government will try to take its fair share, quote unquote, from your capital appreciation. Yeah.
Well, my main point with Bitcoin and crypto is that unlike building a mine, unlike infrastructure programs, unlike a lot of these other investments that politicians are talking about, these congressional spending bills, the government doesn't have to do anything. So if Bitcoin were to 5 years from now go to high six figures, mid to six figures or seven figures, that's a ton, because every time you pay with Bitcoin or every time you trade cryptocurrency, it's a taxable event now. That's a ton of extra tax revenue for the government, and they don't have to spend hundreds of billions of dollars or $1 trillion bill headlines to get it. So from a government tax revenue perspective, and look, I'm not a fan of the government, but I'm trying to put my thinking cap on and think here how the government, because they're that desperate for tax revenues. We talked a lot in this interview that if asset prices on stocks, bonds, and real estate stay low for a long period of time, the Fed's going to have to reverse everything they're saying now.
Yeah.
Because there's going to be hundreds of billions, well over $100 billion in a hole in the federal government tax receipt budget. And then the state and local governments are going to have holes. So the Fed will have to plug everything. And this is why the Fed was so quick in 2008 and 2009 for asset price inflation. They were looking at the treasury tax receipts, George, in 2008, they dropped over 30%, I think, in 2008. And that was just the real estate market. The 2008 financial crisis didn't affect the whole economy that much. It was mostly the banks and the real estate market. It wasn't the whole economy.
I know a lot of people in the financial media are looking at Turkey and saying, oh my gosh, third world country, what a joke. How could they ever let it get to that point? But I sit there and say, yeah, but look at the United States, because we could be, there's a very high probability that we are in the exact same position that Turkey is in, meaning that Turkey right now is in a position where they can't raise rates or else they'll crush the economy. And they have to raise rates because inflation is spiraling out of control. And so how is that any different than the situation that we might face right here in the United States if we see asset prices go down and all of these unintended consequences, these knock-on effects, start to play out?
Well, actually, Turkey is having a lot of similar problems to Argentina and other emerging markets. Argentina has actually been going through very similar problems to Turkey for over 30 years now. Turkey has too much dollar-denominated debt. Turkey, to try to counter this, is increasing gold mining production. So they're actually pro-mining. A lot of people aren't aware of this. They're actually trying to get a lot of foreign mining companies there. They did increase taxes a little bit, a little higher royalty tax on miners, but that's happening everywhere. So it's not just Turkey. I mean, I could name all these different countries that are increasing taxes on miners. I think they put a $90 an ounce royalty tax, a new one for gold miners, but that's really not that bad compared to some of the other. I mean, Chile, we talked about last week how Chile is the Saudi Arabia of copper, and Chile is putting a sliding scale royalty tax. So if the copper price goes to $5 a pound, the royalty tax is going to be astronomical for copper miners, because that's the main product, the main export for the Chile's economy and the main source of foreign direct investment. And this is what the politicians are worried about, that are on the other side of this, that don't want to increase taxes, that want investment and want jobs into their country. The politicians in Chile and Peru, they're arguing that, well, if we raise taxes too much on our best source of investment and exports, we're going to kill that industry.
Yeah.
Politicians don't learn, though.